Hello guys, welcome back to another video. In this video, we are going to solve the CBSE sample paper for class 12 accountancy for the year 23-24. This has been published by the CBSE itself. So we will discuss the solutions. In this one, we'll be focusing on the MCQs, the short questions. There are 16 short questions here of 1 mark each that you need to attempt. Okay. If you have not subscribed yet, click on the subscribe button and hit the bell icon so that you get notified whenever a new video is shared. Do share this video with your friends who can get benefit out of it as well. Without further ado, let's get started. The first question that we have: A and B are partners sharing profits and losses in the ratio 3:2. C is admitted for 1/4 share and for which rupees 30,000 and 10,000 are credited as premium for goodwill to A and B respectively. The new profit sharing ratio of ABC will be, you have to calculate that. Now from here we can easily understand that the premium for goodwill is distributed in this ratio 30,000 and 10,000. That means the sacrificing ratio is 3:1, right? So A and B have sacrificed 1/4 value in the ratio 3:1 in favor of C. Okay, so 3 by 4 of 1/4 is 3 by 16 that A has sacrificed, and 1 by 4, like 1 by 4 of 1/4, that is 1 by 16 that B has sacrificed in favor of C. Okay, so we have the old ratio given to us here. We subtract the sacrifice and we get the new ratio. The formula is old ratio minus sacrifice is the new ratio, right? So for calculating new share of A, it's simple: 3 by 5 minus the sacrifice, which is 3 by 16. Okay, that comes to, the denominator comes to 80. So 3 by 3 into 16 is 48 and 3 into 5 is 15. 48 minus 15 is 33. So that, actually here we have one of the answers. However, let's check the other ones as well. For B, 2 by 5 minus 1 by 16. So 2 into 16 is 32 and 1 into 5 is 5. So 32 minus 5 is 27, which is also here. And for C, 1/4 means 20 by 80, right? So 20 is also here. So option D is your correct answer for this one. Let's move on to the next one. Assertion: Batman, a partner in a firm with 4 partners, has advanced a loan of 50,000 to the firm for last 6 months of the financial year without any agreement, right? He claims an interest on loan of 3,000 despite the firm being in the loss for the year. So his claim of 3,000 is based on 6%. 6% of 50,000 is 3,000, right? So he's claiming that based on that, and it's a charge against profit. So the firm should be paying that interest even if there is a loss. Okay, so the next one, let's have a look. Reasoning: in the absence of any agreement, the provision in the partnership deed provisions of the Indian Partnership Act 1932 would apply, and which is correct. And as per the provisions, 6% interest is given to the partner who has advanced any loan. During the year, company issued 20,000 equity shares of rupees 10 each as bonus shares. So 2 lakh of this amount used up, remaining 6 lakhs, and use the balance amount to write off loss on issue of debentures on account of issue of 2 lakh 9% debentures of 100 each at a discount of 10%, right? 10% discount means 10 rupees per debenture, and which are redeemable at a 5% premium. So another loss due to premium on redemption of debenture is 5 rupees per debenture. So total loss of 15 rupees per debenture on 2 lakh debentures, which is 30 lakh rupees, right? The amount to be charged to statement of profit and loss for the year for the loss on issue of debentures would be how much? So in the securities premium we were left with 6 lakhs rupees, 30 lakhs loss. So that 6 lakhs to be used up here, remaining 24 lakhs will be written off against statement of profit and loss. So option C is your answer here for our question. Let's move on to the next one. ABC are sharing profits in the ratio 4 is to 3 is to 2, decided to share future profits and losses in the ratio 2 is to 3 is to 4 with effect from 1st April 2023. This is a change in PSR. An extract of their balance sheet as at 31st March 23 shows that they have a workman compensation reserve of 65,000. Okay. At the time of reconstitution, a certain amount of claim on workman compensation was determined, for which B's share of loss amounted to 5,000 rupees. The claim for workman compensation would be how much? Now, very clear. That means the claim amount was bigger than the reserve amount. That's why this has resulted in a loss of 5,000. So for B, the share was 5,000, the share of loss. That means the entire loss amount would be, we'll just use the unitary method. B's share is 3 by 6 here, 3 by 9 here. So if you do a unitary method, the total loss is 5,000 into 9 by 3, which is 15,000, right? The total loss amount is 15,000. Okay, but we are asked to calculate the total claim amount. So the entire claim was used up, this reserve was used up, and over and above we had a loss of 15,000. That means the entire claim was 65,000 plus 15,000, so 80,000 was the claim amount, right? Out of 80,000 we could write off 65 against the reserve, and remaining 15,000 were distributed among the partners as loss, right? So option D is the correct answer here. We have an OR question here. A, B, and C are in partnership business. A used rupees 2 lakh belonging to the firm without the information to other partners and made a profit of 35,000 by using this amount. Which decision should be taken by the firm to rectify the situation? As per the rules of the partnership, if any partner is making any secret profit, he or she has to return that to the firm along with the money that the person has taken. So in this case, A should be returning the 2 lakh as well as the 35,000 together to the firm, which is our option number D here. Alright, let's move on to the next one that we have. Number 5, interest on partner's loan account is credited to straight away the partner's loan account itself. No confusion should be there with this. That is the rule. It is credited to the partner's loan account itself. Okay, not to the capital account, not to the current account, and not to the drawings account. You should have a clarity of concept regarding this. Point number 6. Alexa Limited purchased building from Siri Limited for rupees 8 lakh. Okay, the consideration was paid by issue of 6% debentures of 100 each at a discount of 20%. The 6% debentures account is created with how much? So 20% is a discount. Issue price per debenture is 80 rupees, right? And purchase consideration is 8 lakhs. So 8 lakhs divided by 80 is 10,000. That is the number of debentures being issued. 6% debentures account will have the face value of the debentures. So 10,000 debentures divided multiplied by rupees 100, which is the face value. So 8 lakh divided by 80 is 10,000. 10,000 into 100 is 10 lakhs. So 10 lakhs is our value of debentures, the face value. So option B is the correct answer here. We have an OR question. Which of the following statement is incorrect about debentures? Interest on debentures is an appropriation of profits. This is incorrect. It is a charge against profit. The company has to provide interest even if the company has incurred a loss. Let's have a look at the other ones as well. Debenture holders are creditors to the company. That is correct. Debentures can be issued to vendors at discount. That is correct. Interest is not paid on debentures issued as collateral security. That is correct as well. Number 7. Assertion: a company is registered with an authorized capital of 5 lakh equity shares of rupees 10 each, of which 2 lakh equity shares were issued and subscribed. All the money had been called up except rupees 2 per share, which was declared as reserve capital for the company. Okay, the share capital reflected in balance sheet as subscribed and fully paid up will be 0. It is correct because since rupees 2 are not called up on any of these shares which are issued, Entire share capital will be reflected under subscribed and not fully paid up. Okay, so in that case, this is 0. This is correct. Reason: reserve capital can be called up only at the time of winding up of the company. That is also correct. So option A is the answer here. Both A and R are correct, and R is the correct explanation of A. Next one, G, S, and T are partners sharing profits in the ratio 3:2:1. G retired and his dues towards the firm, including capital balance, accumulated profits and losses share, revaluation gain amounted to rupees 5,80,000. Okay, G was being paid rupees 7 lakh in full settlement. That means he is paid additional 1,20,000, and that is simply because of his share of goodwill. So 1,20,000 represents his share of goodwill. S was debited for 40,000. Determine goodwill of the firm. Okay, for giving this additional amount, S was debited for 40,000. In order to calculate goodwill of the firm, we don't need this amount of 40,000. We just need to understand the share of goodwill. G's share of goodwill was 1,20,000. So firm's goodwill will be just a unitary method, 1,20,000 into the reverse of G's share, which is 3/6 in this case. So that will be into 1,20,000 into 6/3. We get it's 2. We get 2,40,000, right? So is the answer for 8 is number C, 2,40,000. Let's have a look at the OR question. Anu, Bhanu, and Chanu are partners. Chanu has been given a guarantee of minimum profit of 8,000 by the firm. Okay, firm to be noted here. Firm suffered a loss of 5,000 during the year. Capital account of Bhanu will be dash by rupees dash. So now the firm has given a guarantee. So 8,000 is already a burden on the firm. On top of that, the firm has made a loss of 5,000. So firm is incurring a total loss of 13,000. That is to be borne by Anu and Bhanu equally, as no share is given here. So obviously their capital account will be debited. So capital account of Bhanu will be debited by half of 13,000, which is 6,500. So option B is the correct answer here. Let's move on to the next one. We have a hypothetical situation. Based on that, we have to answer question 9 and 10. Richa and Anmol are partners sharing profits in the ratio 3:2 with capitals of 2,50,000 and 1,50,000 respectively. Interest on capital is agreed at the rate 6% per annum. Anmol is to be allowed an annual salary of 12,500. During the year ended 31st March 23, the profits of the year prior to calculation of interest on capital but after charging Anmol salary amounted to 62,000. So Anmol salary is already deducted from this amount. A provision of 5% of this profit is to be made in respect of manager's commission. A manager's commission is an item of PL account. This doesn't come in the PL appro. We need to subtract this. However, point to be noted is the word this profit. The 5% is to be calculated on this profit amount which is already given here. So in that case, our manager's commission will be 0.5, which is 5% of 62,000. Okay, 0.5, 0.05%, 0.05 into, which is 5%. So 3,100 is the manager's commission. Okay, 62,000 is the profit, and the partner's salary of 12,500, that should be added back because that is an item of PL appropriation that will be debited in PL appro. So for the profit amount, that needs to be added back. So 62,000 plus 12,500 minus the commission 71,400 is the PL and loss account after managed commission. So here it's better we calculate the second one first. That means number 10 first, so that we can easily calculate number 9. Now coming to the debit side of the PL appro, we have interest on capital. Richa's capital is 2,50,000 and her rate of interest for the partner's interest on capital is 6%. So that will be into 0.06. Similarly, for Anmol, the capital interest on capital will be 15 1,50,000 into 6%, which is 9,000, right? And then we have Anmol's salary. The diesel profit will be 71,400 minus 15,000 minus 9,000 minus 12,500. 34,900 is the diesel profit. We are required to calculate Richa's share of profit. Richa's share is 3 out of 2 out of 5, so 3 by 5. Richa's share will be 34,900 into 3 by 5, 2940. Okay, so option D is the correct answer for number 9. Alright, let's move on to number 11. In the absence of an agreement, partners are entitled to profit share in the capital ratio, no. Commission for making additional sale, no. Interest on loan and advances by them to the firm, yes, that is correct. Salary for working extra hours, no. Interest on capital, no. If there is no agreement, there will be no interest on capital as well. So option C is my correct answer, only 3. Okay, let's move on. Number 12. Rancho Limited took over the assets worth 20 lakhs from PK Limited by paying 30% through bank draft. That means 30% of 20 lakhs, 6 lakhs rupees are paid through bank draft. Okay, and remaining 14 lakhs to be paid by issue of shares of rupees 100 each at a premium of 10%. The entry to be passed by Rancho Limited for settlement will be. Okay, now let's calculate the number of shares that are issued, and the issue price is 110 because there is a premium. Let's do a simple calculation. Purchase consideration, which is 14 lakhs, divided by issue price, which is 110. So we are getting a decimal figure, right? So what we need to do is we will pay off the shares. Shares cannot be in fractions, so 12727 shares will be paid off, will be given to him at the rate rupees 110, which is coming to 13,99,970, and that leaves a balance of 30 rupees that has to be paid via bank draft. So along with the bank draft of 6 lakhs that we are paying, we have to pay 30 rupees as well, and that is represented by this journal here. If you see, purchase consideration 20 lakhs, share capital, which is again the face value 12727 into 100, which is this one, and 12727 into 10, the premium is this amount, and to bank this amount. So option B is the correct answer here. All right, number 12 is done. Let's move on to number 13. A company forfeited 3000 shares of rupees 10 each, on which only 5 per share including rupees 1 premium has been paid. Okay, now this rupee 1 of premium which has been received by the company is to be excluded from the calculation. So we'll consider only 4 per share that has been forfeited. Okay. Out of these, few shares were reissued at a discount of rupees 1 per share. So if we are giving a discount of rupees 1 per share, the profit per share that the company is making is rupees 3 per share, 4 minus 1. Okay. And rupees 6,000 were transferred to capital reserve. How many shares were reissued? If 6,000 were transferred and profit per share is rupees 3, then 6,000 by 3, 2,000 shares were reissued. So option C is your answer. Alright, let's move on to 14. X and Y are partners in a firm with capital of 18,000 and 20,000, right? Total is 38,000. Z brings 10,000 for his share of goodwill, and he is required to bring proportionate capital of 1/3 share in profits. The capital contribution of Z will be how much? So 18,000 and 20,000 are there. Then Z brings 10,000. This also gets distributed among the old partners in their sacrificing ratio. So that will be added to their capital. Total capital will become in that case is 48,000, and this 48,000 represents 2/3 share. Okay, so the total capital of the firm would be how much? 48,000 into 3 by 2, 72,000. So out of this, 1/3 share will be Z. So Z will be bringing 24,000 as his capital. So option A should be the right one here. Moving on, 15. A and B are partners. B draws a fixed amount at the end of every quarter. Interest on drawings is charged at the rate 15% per annum. At the end of the year, interest on B's drawings amounted to 9,000 rupees. Drawings of B were how much? We are required to calculate B's drawings. Now, this is end of every quarter and the rate of interest is 15. The average period that we will be taking here is 4.5 by 12. How we are arriving at this, if you are not aware, I have covered that in a detailed video explanation. I will leave a link in the description box below. You can go and check that out. That explains how interest on drawings is calculated on various scenarios where there are monthly drawings, where there are quarterly drawings, half yearly drawings. Different scenarios are there. So in this case, the interest is already given to us. We are required to calculate the drawings amount. Okay. So whatever we multiply to calculate interest will be divided, and whatever we divide gets multiplied. It's like a reverse calculation that we'll be doing. So into 100 into 12 that we generally divide, we are multiplying here, divide by the rate of interest that we generally multiply, and divide by the average period, which is 4.5. So 1,60,000 is a total drawing for the entire year. So divide by 4, 40,000 is the drawings per quarter, right? So option B is the correct answer here. Shyam and Gopal and Arjun are partners carrying on garment business. Shyam withdrew 10,000 in the beginning of each quarter. Gopal withdrew garments amounting to 15,000 to distribute it to the flood victims, and Arjun withdrew 20,000 from his capital account. The partnership deed provides for interest on drawings at the rate 10% per annum. The interest on drawings charged from Shyam, Gopal, and Arjun at the end of the year will be. Okay, so Shyam withdrew 10,000 in the beginning of each quarter. The average period here comes to 7.5 by 12. So 10,000 is beginning of each quarter. His drawing is, so that becomes 40,000 for the entire year, right? So 40,000 into 7.5 by 12 into the rate of interest is 10%, that is 0.1, that is 2500. That is the interest on drawings for Sham. For Gopal, he has withdrawn 15,000 worth of garments and no date is mentioned. That will be taken as an average period of 6 by 12. So for him, 15,000 into zero point 0.1, which is 10%, into 6 by 12. So 750 will be his interest on drawings. And for Arjun, since he had withdrawn out of his capital has reduced. That will affect his interest on capital. So interest on drawings will not be impacted. So option C is my correct answer here. Moving on to the last question that we have. On the day of dissolution of firm, Roop Brothers had partners' capital amounting to 1,50,000, external liabilities amounting to 35,000, cash balances 8,000, and P&L account debit balance of 7,000 rupees. If realization expenses and loss on realization amounted to 5,000 and 25,000 respectively, the amount realized by sale of assets is how much? Okay, first let us calculate by preparing a memorandum balance sheet. What is the amount which is the value of the assets? Okay, how much is the value of the assets which has been transferred to the realization account? So if you see here, the capitals are 1 lakh, the capital balance is 1 lakh 50, external liabilities 35,000. Okay, so total on the liability side is 1 lakh 85,000. Okay, coming to the asset side, we have debit balance of PL and cash balance 7 plus 8, 15,000, right? So the balance, the difference of both the sides, 1 lakh 85,000 minus 15,000, that's coming to 1 lakh 70,000. That is the net value of assets which are transferred to the realization account. Okay, that is done to the debit side of realization account. To sundry assets we have transferred 1 lakh 70. Now come to realization account. Think of that, 1 lakh 70 on the debit side, then realization expenses 5,000 on the debit side, which is also debited, right? The external liabilities which are paid off, so 35,000 comes both on the debit and the credit side, that gets nullified. Okay, so 1 lakh 70 plus 5,000 is 1 lakh 75,000. Okay, and on the credit side we have the realization loss which is shown 25,000. Okay, nothing else is there. So 1 lakh 75,000 minus 25,000 if you do, so 1 lakh 50,000 is remaining, which is nothing but the value of assets realized. Okay, so D becomes your answer here. Okay, I did this orally. You can do this on pen and paper and get the answer. If you follow the instruction word by word, you will understand what needs to be done here and in other questions as well. If you have any doubts, do let me know in the comments box below. I'll catch you all in the next video with the next series of questions that we have in this set of paper. Do share this with your friends so that everyone gets benefited, and don't forget to hit the bell icon for notification. Thanks for watching, guys.